Going on, everyone? It's Quinn. Figured I'd do a quick little video as I'm walking around. I'm hanging out in Vegas for a couple days. There's nobody around me. It is completely empty, but figured I'd do a quick little video on my investment philosophy, and also Las Vegas has given me some thoughts. So by the end of this, hopefully you'll get a little bit of an understanding of how I buy and sell stocks, how I think about companies to invest in, and also just some little tips that I've learned along the way. For me, one of the first steps was actually just figuring out how I'm spending my money. It wasn't necessarily something where like immediately I had to make changes. I think it's just really important that people start wrapping around where their money's going, how their money's coming in and out. So the inflows and the outflows of your money, that's kind of just like the first step of not necessarily budgeting, but just understanding your cash flow. So think of yourself as a business and you have inflows or you have revenues, the amount you're making maybe in your job, and you have outflows. So rent, car payment, food, going out to restaurants, going out to bars, whatever those might be, but you have inflows and outflows. And so that basically is your cash flow. I think that's the first thing to just start wrapping your head around. There's plenty of like apps out there. There's Mint, there's another one called Personal Capital, and all of those will allow you to kind of put in your credit card accounts or your bank accounts, just kind of understand, okay, here's how much money per month I'm spending on restaurants, here's how much I'm spending on rent, and kind of give you a general overview of your cash flows. I think that's like just a really important thing. Again, you don't have to make any changes, but just starting to see how much you're spending in certain areas or how much you're saving in certain areas can be really important. And from that point, then you can actually start to maybe make certain decisions and say, okay, I spend $200 a month at coffee shops. I'm gonna spend $50 less and I'm gonna put that into an investment account and just let it sit. Someone else is gonna invest it for me. That's some of the things like those robo-advisors. I talked about Elvest before. So there's certain really easy ways you can get started in investing, but I think the first step, just understand your cash flows, understand where your money's going, then you can kind of start to make certain decisions about areas maybe that you can save some money and put it into investments. And then there's also, once you're actually in that position and you kind of understand where your money's going and you've started to invest, then you can kind of start to decide, okay, do I want to invest in index funds, or do I want to invest more in individual stocks? Do I want someone else to do it for me? And a lot of people really just don't need to be doing it themselves. I've also been doing this for probably 10 years where I'm managing my own money, but I think most people just don't need the stress of managing it themselves, and a lot of times you probably do a lot worse than if you're just putting it in the stock market anyway. So that would probably be my next thing, is just understand those cash flows, figure out where you can maybe save, where you can start to put money aside to invest, and then maybe just put it into a robo-advisor, one of these accounts that'll automatically invest for you every single month. And then from there, you can just kind of, let it sit. Like, put some money in there every month, kind of consistently do it. But for the most part, most people just don't need to be actively involved in those investments, and it'll create a lot more stress, and it'll create actually, probably more losses and just more things that are going on in your mind, and you won't be able to actually keep everything straight. So that is a little quick intro there. So essentially when I'm buying stocks now, and actually like in Las Vegas, you see all these lights, all these numbers thrown at you. There's like this excitement about potentially winning, winning big. And I think that's kind of where the stock market is right now, is at this point where the hype around it is so high. Everyone wants to get involved. There's things like cryptocurrency that are going crazy. There's all these stocks that are going up super fast, and it's really hard to like maintain composure. But I think the majority of people involved in the stock market don't actually need those super quick, get rich quick schemes. They need just something steady, stable, not necessarily risk-free, but lower risk than some of these other investments. And I think that's where a lot of these videos, or a lot of the things I'm going to be posting on this channel, are more centered around. It's not, I know that some of my things have been a little bit clickbaity. That's not what I'm trying to do. I'm not trying to be clickbaity. I'm trying to bring some value. There's plenty of clickbait on there on YouTube that you can look at, but my goal is just to bring value for the investment side of things, let you know a little bit about how I do things, and also just have some fun doing this. This has been a month and a half so far that I'm in, so I've been probably posted about 20 videos so far, and it's definitely been a little bit, I've been a bit shy, a little bit embarrassing to be posting these videos, especially when I'm walking around this like practically empty mall holding my phone out. It seems like it should just be a normal thing. Hey, look at these two people right here. It seems like it should just be like a little normal thing that you're able to do, but it's been a little bit odd. So with these videos, my goal is to actually like tell you kind of some of the things that I've invested in, some of the things that you can actually put into practice if you're just getting started with investing. I'm assuming that most of the people that would watch these videos are, just getting started with investing or even just money management. It's not, you don't have to be investing in stocks. It could just be like, hey, I need to start saving some money. I need to get an emergency fund. I need to adjust my spending, whatever that might be. So I think it's just important that you remember that this is like something that, even though money creates tons of stress in relationships, just in terms of like how you actually manage your money, it's really important just to remember that it's okay. Whatever position you're in right now, it's totally okay. You can get out of debt if you need to. Right now, you can start saving money if you need to. You can start investing. Whatever stage you're at, like, it's totally okay, and you'll be able to figure out how to do it. My philosophy in terms of investing is to focus more specifically on value investing. So that's something that Warren Buffett has been a big proponent of, and that's just investing in companies that have strong fundamentals, things that you know about. So not investing in some crazy company that you have literally no idea about, just making sure that you're making investments that have less risk or less unknowns than certain things that might be the big glamorous thing that's being talked about. So there's absolutely nothing wrong if you want to invest in cryptocurrencies, you want to invest in GameStop or whatever these big hype names are that are going on right now. But at the same time, sometimes it's just the more boring investment for the long term is going to be the better investment. That's not necessarily the case all the time, but it's definitely something to keep in mind, where if you're in this for the long run, if you're young, probably watching this video, the longer you're in it, the less risky assets might be more beneficial for you to be investing in. So again, just something to think about. For me, I'm more investing in companies that have strong business fundamentals. They've been around for a long time. They've kind of shown consistent growth. They have a strong management team, something that I can believe in and just understand. So those are pretty much the type of companies that I'm investing in. I still invest in some tech companies, but for the most part, I'm not going to necessarily invest in something that's putting my money at increased risk. I'd rather make money slowly, have it compound over and over, compared to some of those bigger investments there. One thing I thought about as I was rewatching this video is, for young investors, you actually probably have more of the ability to invest in some riskier assets. This is what you'll hear a lot of people say, because you actually have the ability to make back that money. Whereas if you're older and you invest in risky assets and you lose money, then the time you have to actually make it back is a lot less. So if you are young, you do have probably the ability to invest in some more risky assets because you have more time to make that money back. However, for me personally, I still try and invest in less risky assets, or just understanding the risk of what I'm getting in, because losing money is never a good thing. So I'd always much rather make money off of my investments than lose money. So again, just if you're younger, you do have the ability probably to take some more risk because you can make it back. But at the same time, risk is never, understanding your risk is more important than just choosing something that's risky just for the heck of it. Anyway, we'll talk about a lot more of that as we go through this channel. My goal is just to start doing videos probably 3 times a week. I've been doing that so far for the month, or for the year of 2021. We'll probably continue that. I know I'm at like a small amount of subscribers now, but we'll see what happens. But yeah, my main goal is bringing you all value. Not trying to be clickbaity, not trying to sell you things, just kind of tell you about experience, stress-free ways that you can start, looking at your money situation, making some changes if you need to, and then start investing in healthy ways that are going to allow you to build wealth over the long run. So thanks so much for being here. Thanks so much for watching me as I walk through Vegas. And the one last thing I'll say about Vegas that's kind of made me be thinking, all these flashing lights, all this money that you can win, kind of reminds me of Robinhood in a way, where the one reason I don't like Robinhood is because they make it like Vegas, where it seems like, oh, I have to get involved. When you walk through all these casinos and you see all the big flashing lights and you see all the numbers and you can win $10,000 in the slots, it makes you want to keep going, and it doesn't actually allow you to think about where your money's going. So you press max line and it allows you to like bet $9 in one spin of the slots. But in those cases, it's a really hard way for you to conceptualize where your money's going. And I think that's the same thing with Robinhood. Although it allows you to learn how to invest, and you can kind of see, oh, I lost this much money today, or I gained this much money. It's not necessarily allowing you to make decisions for yourself. I think a lot of times it's making it more of this social experiment, where it's like, this is a really popular stock, go buy it. But sometimes the most popular thing is not the best thing for you to be investing in. So I just have seen a lot of parallels today between Vegas and Robinhood and the stock market in general, where all this hype and all this excitement about potentially making money, but in the most case, you're probably just gonna lose your money. So yeah, I'll see you next time on QuinnTalksMoney. Thanks for being here. And yeah, if you have any suggestions or things you wanna hear, please leave it in the comments. I appreciate you and your support, and hopefully I can make these videos much more valuable in the future and keep bringing value. So I'll see y'all later.